But you're absolutely right, Ash. And they ask you all those questions. Why? They ask you that to find out how much they should withhold for both state and federal income tax.
What if it's like a cash revenue?
Shh. Keep it a secret.
Right.
No, I didn't say that. IRS, if you're listening. If we're that important and we do get them to listen, then even kudos to us. Welcome to Adulting Decrypted, the show where we break down the complex code of common conundrums into logical living. In an effort to decrypt the code we call adulting. We are your hosts.
I'm Gene, and I currently have a goatee.
Ooh, that's exciting. I'm Gideon, and I skied this morning, and I was super rad.
I'm Ashton, and I recently downloaded Robinhood just to see what that was like. It's an investment app, so that's been fun.
Cool. And I'm the dad. And welcome to Woodshed Studios, where we have a chance to talk about one of the things that they say is a guaranteed in life. You know, there's an old adage, an old joke that goes, there's only two definites in life, dying and paying taxes. So which one are we talking about today?
Taxes.
Yep. Awesome. We're talking about taxes. It's getting to become that time of year. Out of this group, who's filed taxes in their life? Obviously, I have.
I haven't.
You've never filed a tax yet? Okay.
Nope.
I've paid tax.
Yeah, sales tax. Yep,
Yeah.
that's not what we're going to cover. That's a good point.
No, I haven't.
You've never filed taxes?
I don't think so.
Really? Well, okay. I filed taxes for you.
Yeah, you've probably done it for me. I've never been able to do it by myself yet.
Yep. So I don't do it by myself, candidly. I hire a tax accountant to do it for me because there's some of the complexities of having a small business and being diversified like I am that I do hire a tax professional. But this is a very elementary entry level conversation about taxes and just kind of to get you guys thinking about it. It's part of being an adult. So
yay.
This is probably the one that's not as much Gideon touched on a little bit. We have a sales tax in the state of Utah. And it's difference by county. Did you know that? Like Utah County, where we're at here, has a different tax rate than Salt Lake County. And most of us don't realize that. There are some things that are tax exempt, like food items. Particular food items don't have a tax on them, but others do, as it pertains to sales tax. So sales tax gets very complicated, and it's very much state by state and county by county. So let's go through and list some of the taxes that we can think of. We talked about sales tax. What other taxes are there?
Property tax.
Property tax, that's a great one. And is that standard across the country of the United States?
Yep.
Nope. Very, very different based on locations. That is also, that one gets as complex as a city. So Pleasant Grove City's a little bit different. Now they tax you as Pleasant Grove, and then you get a little bit of Utah tax, and you get an education tax, all rolled up into that property tax. So what other kind of taxes?
Income tax?
Yeah, income tax, and that's where we're going to spend the majority of our time. There's just for today's purposes so that we can get a better understanding of what income tax is, because when are taxes due? Do you guys remember that?
Isn't it a yearly schedule?
Uh-huh. Yep. Every year on a certain date.
I feel like it's in February.
That's a good feeling, but you would be wrong. It's good to have feelings, and I don't mean to hurt yours, but you would be wrong. It's April 15th. I find it funny that it's April 15th, seeing that election is November 15th. So they want to get it kind of as far away that they can. So if you think about November, December, January, February, March, April, they're kind of pushing it, but they don't want to ruin anybody's summer by pushing it into May. So they kind of push it out far enough that we don't remember who we elected or why. But anyway, so there's some tax implications of everything. So a couple things about being an adult. First off, if you make less than, and it changes every year, so don't take this to the bank. Do your own research once they come out with all the 2020 tax laws and stuff. But it's right around $7,000. If you make less than $7,000, you don't have to file a federal tax. It's been upwards of $10K before, and it's been as low in recent history. Back when I was younger, it was around 5. So there's a fluctuating. So pay attention to it. That's something to be aware of.
How do they know if you make more than 7,000?
That is a fantastic question. When you go to work for an employer, does anybody remember what they had to fill out?
You have to fill out a W-2.
Yep, a W-2 form. And a W-2 form has what kind of stuff on it, Ashton?
It asks you your name, your social, your address, but then it also...
So right there, he hit on it, social. They tie the social to your income. But go ahead, Ashton, keep talking.
I was going to say they take your social, address, name, and then they also have, pulling from my memory, they have like check boxes and stuff for saying like how many jobs do you have, how much do you make over this amount from those jobs, things like that.
Yeah, and really all they're trying
dependents.
Yeah, they have. Do you have dependents? What they're trying to gather with that information that they're asking you, Ashton. If you guys hear paperwork shuffling, I'm just looking through my daughter's tax return just to kind of give people ideas, because mine looks obviously very different than hers. It's a little bit more complex. But you're absolutely right, Ashton. They ask you all those questions. Why? They ask you that to find out how much they should withhold for both state and federal income tax.
What if it's like a cash revenue?
Shh. Keep it a secret.
All right.
No, I didn't say that. IRS, if you're listening, if we're that important and we do get them to listen, then even kudos to us. But the reality is Gideon, the cash transactions, there's a spot on the income tax form that asked you to fill that out. So you just put in there honestly what you made.
Okay.
So honestly, do we think drug dealers pay taxes?
Probably not.
Yeah, they probably don't write that down. There's also a place in there where tips go on a sheet, and sometimes people don't report those honestly. But I would really suggest you report those honestly and keep track of it so that it's fair to you, fair to the government, fair to everybody. Because there are certain deductions that you'd get, but we can cover that in a second. So you fill out this W-4 when you start to work for somebody, and they give you all that's where they ask you all these questions. And what they're trying to do is help you assess the tax rate. Because if you don't hold off enough taxes, guess what happens? Do you think the government forgets about it and doesn't worry about it?
No, the government never forgets. They want their money.
That's right. As a matter of fact, somebody who will not be named is fighting the government over the amount of taxes they believe should have been paid. And this individual felt like should be paid. But the IRS actually goes back to when the taxes were due to April 15th and is charging an interest rate regardless of what their findings are. So really the advice that I gave them was to pay your taxes now and pay that small interest, and then the IRS will refund you your money. Do you think they give you interest back if they find out that they're wrong?
No, of course not.
Nope, they don't. So my big thing is don't overpay, but when your taxes are due on April 15th, make sure that they're paid and that you have documentation of paying them. So
because that interest never comes back.
That's right.
The other thing that I wanted to jump in on is, so W-2 and W-4, you've mentioned both. What's the difference?
Yeah,
nutshell?
When you start a job, you fill out your W-4, right? It's a federal paper that just has you to fill everything out. The W-2 is what you get at the end of the year after you've worked for a company. So everybody right now be checking your mailboxes. Have your parents check their mailboxes. Make sure you're watching for your W-2 or a 1099. What do you think a 1099 and a W-2, what are the difference on them?
Name?
Yep, you're absolutely right. Name, and on a 1099, they haven't withheld really anything. On a W-2, you've already paid, these are all the different taxes you could pay. Your Social Security taxed, your Medicaid tax, in addition to your federal income tax. And so you've already paid those. On a 1099, none of those, and probably a state tax. On a 1099, they haven't withheld any of the money. So if you go and get a gig and you get a 1099 form, you need to realize that that's going to be added to your tax amount, but there's been nothing withheld against it. That's why when you fill out that first form from your employer, they're asking you very directly, do you have other jobs? Do they withhold anything? Because they're trying to help you make sure that you don't have, that you don't underpay, so that you're not held with this huge tax bill you can't pay at the end of the year.
Question.
Yep.
So the IRS knows exactly what you have to pay.
The
but they
Internal
make
Revenue
you
Service.
figure it out.
Yeah, well, here's why. Because they have estimates. And what I mean by that is there's tax brackets. And a tax bracket, just to give you a little idea, and you can, anybody that's curious can Google this on their own and find out for their federal government, if you're not in the United States or if you're within the United States, you can figure out what your tax bracket should be. So I'm having a hard time finding 2020's tax brackets. So these numbers are a little bit old. But, for example, if you make $50,000, you fall into a 25% tax bracket. If
25% as in you pay them 25% of what you make?
Correct.
Okay.
If you make more than that, it all varies based on how much you make. If you make up to $10,000, could be as little as $10,000 or a 10% tax bracket. If you make upwards of $500,000, you could be in a 40% tax bracket. So it all depends on how much you make.
And why do they change that?
Because the perception is to redistribute wealth, right? We believe, as a populace, as a whole, not as individuals, but because of the people we vote into power, we believe that the government does better at repositioning our money than we can. There's a lot of debate on that, right? Here's another.
I can see the issues with that, but
right. So without getting into political debate, the easy answer is saying they believe that poor people need more money to operate. Because if I take 10% from somebody who makes $500,000, how much is that? $50,000, right?
Yeah.
But if I take from somebody who makes $50,000, and they make $50,000 and I take 30% of their money, I'm taking closer to $15,000. So who's it going to hurt more?
The poor.
Yeah, in essence, you're penalizing the
so
poor.
You're hurting the people, hopefully the same amount.
Correct.
Is that what they're?
Well, it's arbitrary, right? But the theory is that we're giving pain to those who can afford pain.
And what if the people that make the upwards of 500,000? What if they need that 70% instead of the 60?
Yeah, there's that's where the debates come in. So
all right.
So what you're talking about is redistribution of wealth and how it should be done. And unfortunately, we don't control a lot of that as individual taxpayers. That's right. So we need to know it. So that's where you get into exemptions, right? So here's a common misbelief, though, Gideon. If I make $60,000, right? I'm making up a few numbers here, making a few assumptions. All right. So going back to the 10%, if you make, I'm sorry, Gideon, my last example was not correct. If you make $40,000 to $81,000, you'd be at a 22% tax bracket. If you're married, filing jointly. If you're single, it's a different tax bracket. And just to keep it from getting too confusing, there's a bunch of different tax brackets.
So you just got to see what you fall under.
Correct. Correct. What you do is you fill out what's called the 1040, which is how you report your taxes. So let's back up a step before we go down there, but we'll go over the principle of it first, okay? If I make under $10,000, I don't pay any taxes. I'm good to go. Thumbs up, move on. If I make $10,500 or $20,000, right? $9,950, and I pay 10%, I'm only paying
$100.
Correct. If I make over $9,950, and this is what I hear a lot from people, they're like, hey, I made $11,000. Well, I don't want to make $11,000 because I jump into the 12% tax bracket, right? Because that once you cross over that $9,950, you're in a 12% tax bracket, but really you're only on it for the difference of that $1,000.
And when you say make money, so it's coming right from your job. It doesn't count paying for food or...
Correct.
So it's completely not it doesn't count for emergencies and whatnot.
Correct. So this is net.
It's just saying what you make.
That's right. So if I go to work, I make $10 an hour. I work 40 hours. I make $400. Ashton, do you see $400 on your paycheck when that happens?
When
When you go to work, let's say what do you make? Let's say you're making $10 an hour,
Yep.
and you work 40 hours. Do you see $400 on your paycheck?
Oh, no.
What do you see?
I see about 20-30% less than that.
Yeah, you see a substantial chunk less than that, and that's the taxes. They're taking out federal, state, Social Security, FICA, which is like an unemployment tax, and then a Medicaid tax. So they're taking out all these taxes. They don't care that Ashton needs $8,000 or $9,000 for tuition next semester. They don't give a rip. What they care about
Not
at all, what they care about is getting their share of money to keep the federal government going or the state government going.
And what if you end up falling under a different section? So, like, if you were going to make whatever one of the barriers is, let's say it's 50,000. So, if you were going to make more than 50,000, but something ends up happening and you make less than that, do they give you money back?
Yeah, yep, that's a great point. There's a refund at the end of the year. But what they're doing is they estimate based on your annual income what you should be paying. And then let's say you lose your job, right? So let's say you're on target to make that $80,000, right? So you're like, well, let's call it 86 just to keep it easy. At $86,000, you'd be charged, as a single person, you'd be charged 24% taxes, right? But you're not charged that on the whole chunk. On the first $10,000, you're charged 10%. Up to $40,000, you're charged the 12%. $40,000 to $80,000, you're 22%. So there's this big scale, right? So they don't look at it just black and white. They kind of say, hey, your tax liability roughly for $50,000 is going to be, let's say 25% of that is roughly of $50,000 would be $12,000. So they're going to be taking a little bit out every paycheck. However, you lose your job and you've got this bank of money in there. If you don't find a new job, that money sits in there. You go to the end of the year, you file your taxes, you find out that you only made $9,950. They're going to, so you should be taxed at 10% of that total income that you made. You'd get the difference back in what's called a refund, either a federal or a state tax refund. Does that make sense?
Yeah.
But in addition to that, there's some exemptions to that. Have you guys ever heard of exemptions? What are some exemptions, do you think?
You know what? I actually think I was thinking of write-offs, but
Yeah, same thing.
Exemptions.
They're very similar.
When I think of exemptions, I think of like charity.
Yep, those are technically
Nonprofits.
write-offs. Exemptions are like children. Those are
Yep.
free gifts. Exemption says if $10,000 is a magic number and you get an exemption for $1,000 for a kid, it's really like you only made $9,000. An exemption is truly a wipeout. A write-off is a percentage thereof, right? So if you do a write-off or a charitable donation, etc., there's just a percentage of that you get to write off, not the whole thing. For example, not to go too deep on this, but on mortgages, there is a tax write-off. Well, the problem is you're only writing off the percentage you would have paid taxes on. So let's just stay at $50,000 because it's pretty easy. $50,000 is a 22% tax bracket. Is this boring or what? No, really, is it boring?
Yeah, kind of.
Yeah,
I
Gene,
see
is
why
it
you
boring?
pay people to do the taxes.
Just trying to get my head wrapped around a few things.
Yeah, there's a lot, right? So the first time you listen to this is going to blow your mind. But so just at that $50,000, you'd be normally taxed at $22,000, or excuse me, 22%. However, if I have an interest rate that I'm paying on a home, the federal government wants us to own a home. So they give us what's called a write-off. So they say, oh, you paid $4,000 in interest last year for your home. You get a write-off, 22% of that, that would be your tax rate of that interest, because you don't get charged for part of your interest. So you don't get the whole thing back. Even though I spent $4,000, they don't back off. Oh, you owe $4,000 less in taxes. You're down to $46,000. No, you get 22% of that write-off. Does that make sense? An exemption is truly like a gift, right?
So basically, if you're trying to save money on your taxes, have more kids.
That's sure. That's one thing.
Except for they cost more, so
Yeah.
just kind of.
Yeah. So we're gonna walk through some of those fun. Yeah. So exemptions. The difference is that exemption is truly, Yeah, it's truly like a discount. There's earned income credits, is 1,000% savings. Itemized deductions is more of what we were talking about with like charities and those kind of things. They allow you to build that up. We already get a standard deduction based on just being a human being and living. They're going, hey, you deserve a little bit of money just to stay alive, but it's not enough to really survive. Anyways, so it just gets kind of complex. So let's look, if you guys just got your W-2 for the year, you're going to see in box, there's all these different boxes, and you can Google. Like box A, guess what it is? It's your Social Security number, right? You asked why do they make you fill it out? That's how they're keeping track of you. And then box B would be, the employer's basically Social Security number. It's called an EIN. It's really an employer identification number. And so they're saying, hey, Water Gardens reports I paid Ashton, in this case it was Sabrina, ironically enough, X amount of dollars.
It's funny because we've both worked there. That's why that's ironic.
Correct. Said, I've paid Sabrina X amount of dollars on my taxes, so I want a reduction of my taxes. And Sabrina gets this notice saying, hey, to this Social Security number, we paid this much money. And does it tie together? If it does, then you're good to go. We give you a thumbs up and you move on. If it doesn't, then there's a problem. So it goes through and talks about your wage, how much federal income tax was withheld. Box 3 is Social Security. Box 4 is Social Security tax withheld. So there's all these different numbers on a W-2, and they all have a meaning. So you just need to go through and read it. It's pretty self-explanatory of what they withheld, but most people see the numbers, they get frustrated, they give up.
Oh, well, I can attest to that because recently at my job at Walmart, our system has a thing where when you swipe your time clock on the little screen, management can put messages on there, and the message that came up a couple days ago was come to the personnel office and grab your W-2. And so I got it, and then when I got home and opened it, I looked at it for about a maximum of 5 seconds, and I hung it on the fridge, and I was like, okay, I'll talk about that with Mom and Dad when they get home. Because I was like, there's no captions on here, there's no words, it's just a whole bunch of boxes.
Right. And that's what's tough, is some employers don't put all the details in there. It really didn't have, like, what it was.
I mean, it had that it was a W-2, but it was just... It was a bunch of duplicates of the same form in a half a sheet of paper, basically.
Yep, and the reason why it's a half a sheet of paper is because you need a couple different copies. You need one for you. You need one for the federal government, one for the state, and then sometimes you have one for a county that you live in. So they're just kind of supplying you with enough that you can file your taxes. And that used to be really important when we were doing a lot of paper taxes. A lot of people are e-filing now. So there's a lot that goes into your federal income tax. Now, when you're first starting out, would I suggest you do your own taxes? Absolutely. I'd get there's normally a free form. We've used TurboTax. There's Easy Tax. There's a variety of different places. If you don't have a 1099 and you get just a straight W-2, you plug this W-2 in. You fill out the boxes. So for like a 1099, this is how easy it is, and I'll just for simplicity, I'm just reading through some of the boxes on it.
So while you're kind of finding that, is it an employer's job to supply you with a W-2?
Absolutely.
Okay.
As a matter of fact, they have to send it out by a certain date. But the problem is, and this is one of the things that somebody was fighting, is that the employer didn't send it out on time. So the individual forgot about it. Right. Whose fault is that? Is that the employer or is it the individual?
Well, I think the IRS doesn't really care, so they probably just peg the individual because they can't, it's their word against what the IRS sees. You got it.
So as long as they filed with the IRS in time, right, and they filed all their paperwork, they don't care that you didn't get it on time. Now, you could go to the Better Business Bureau, or the Labor Board. You could file a complaint, and if enough people miss, like a Walmart, then they could get in trouble.
If it impacts enough people, basically.
Correct.
If you're a standalone issue, it looks more like you're the issue rather than the company.
Right. Yeah, no, we mailed those out. So the certain person moved. Not our fault.
Right.
Or, hey, we told Ashton to go to the who did his payroll office, and he didn't go. So shame on him, right?
Right.
So you get your first taxes, you do your taxes, then you sit down to the computer and you start trying to fill it out. Well, it tells you where to put in each box, right? It says 1A says, did you have any farm profit? Are you then it says, did you receive Social Security and benefits? Did you do, and then it says, what's your total income? And then it just walks you through so that you have to fill this out line by line by line. And then it gets to some really simple math, but it feels very complex because it's very wordy. It says, take your total taxable income, right? Not your Gideon gross, which is what you got to bring home. So we're not asking Ashton, hey, on your $400 check that you got $318, we're asking you on that $400, you multiply that by how many weeks you worked, what was your total amount you earned, right? And then you multiply it by the tax rate, and let's say it's 10% tax, right? They'd say you owe $4,000. We'll go to your box, add up all your box C, box on the W-2, which I think was box 2, said add up all the federal income tax you paid. Oh, I paid $11,000. Cool. You get a refund of $6,000 in that scenario, right? That's how easy it really is.
So, I think this is a dumb question, but
there are no dumb questions when it comes to taxes. Because, right, what were the two things we talked about? Death and taxes, right? Those are two guarantees in life. So there's no dumb question.
So when it comes to paying taxes, basically at the end of the year, you're just doing a double check to make sure that the proper amount has been taken out of your paycheck every time you get it. It's not that at the end of the year you have to come up with this sum and send it to the IRS.
Let's say they didn't take out the proper amount, then what happens?
Then I have to pay more.
That's right. That's why it's important that you keep track of what you're making through the year, and you compare that with what you think your federal withholding should be. Now, am I telling you to go out and panic? No, most people starting out to become adults are in the adulting phase, right? So they have lower jobs that really aren't hitting high tax brackets. So the probability of you having to pay additional taxes is slim. But does it happen? Guesses?
Oh, I mean, I would say yes, because didn't that happen? Like, they came after her for more money?
Correct. Yeah, I was trying to keep her name on the down low. But yeah, that's what happened. One of her employers didn't file her her W-2. She amended her taxes and sent in the proper amount and the paperwork. But now the IRS is saying, oh, we audited you. Okay, audits aren't a big deal. It happens. Don't freak out. It's not the end of the world. We had to go through and supply them the paperwork showing, hey, she did file federal taxes on April 2nd, and then she got this notification. So we refiled them before the deadline on April 14th, and we sent you in a check, and here's the copy of the voided check. Here's the amount we show that's due, and the IRS is coming back saying, okay, thanks for letting us know. We still think you have a tax bill of about $100, and you have a tax bill of about $100 that we'd like you to pay. While we're in the auditing process, it could take us an additional 90 days. Pay the $100 now so you don't get even more interest tacked on. So it's kind of brutal. But yeah, to answer your question, it does happen. You could write a check at the end of the year. So that's why if, let's say that Adulting Decrypted gets picked up and goes national, right? It becomes syndicated. Would we be stoked?
Oh yeah, for sure.
At least one person. I would be stoked. Gideon, so 2 of us. 50% of us.
That's pretty good.
Ashton, if you're stoked, I'm stoked.
I'd be stoked.
Okay, so then let's say that we get paid for public
100%.
appearances and we start making some coinage on this. Would this be fun?
Yeah. Dope.
Okay. The question then becomes...
Go check out our merch.
Go check out adultingdecrypted.com. We've got some cool merch. We're going to show some pictures of that. Thanks. Good plug there.
No worries.
We'd be pretty excited, right? Guess what I would be doing in August? Just rolling in cash and totally happy.
Probably not recording how much.
Yeah, we'd obviously be needing to record a lot. We'd need to perform on our on the contracts. In addition to that, I go to my tax accountant. I go to him early and say, hey, my adjusted gross income is going to go up substantially. Right? What can I do to be prepared to save enough money to pay federal income tax? And how do I make sure I take full advantage of any deductions, i.e. write-offs, and any credits that are due? For example, we could probably go do some R&D. We could do some research and development. I could send you guys out into the malls and do surveys and offer to give people gift cards. And there's a guy that you like to watch that's really popular on YouTube.
Probably Mr. Beast.
Yeah, Mr. Beast. He gives away quite a bit of money or something. Is that who I'm thinking of?
Yeah.
He writes a lot of that off on his taxes. He doesn't pay taxes on that money. It's actually, he does it through his business, so it shows as a business loss. So that's more like not a deduction, but a credit. That's like he never made that money, right? So if he has a promo, he's going to go do, and he thinks he's going to make $100,000 off of it, and he throws $60,000 off at it, he's only paying taxes on that increase of $40,000. And he's having a great time doing it.
I mean, it makes sense.
Yeah. So what would we be better off to do? We'd be better off to go talk to a tax advisor and find out the proper way to do it, make sure that we're doing it in the guidelines that the federal government has given us, so that if we do get audited, we've done it exactly how we've been asked to do it. Does that make sense? I'd also look at saying, is there anything else I can leverage, to help us, plan for the future, right? Some of those things are when you contribute to a 401k. You're working at Walmart, they offer a 401k. If you put your money into a 401k, there is a tax deferred 401k, which says, hey, that doesn't look like net income. So even though I made $40,000, I put $4,000 into my 401k. When I report to the federal government, how much do I have to report them? $40,000, I put $4,000 away. Who's quick at math this morning?
Well, that's $36,000.
Yeah. So I just tell them I made $36,000. That $4,000 is growing in there tax free. Do you think I get to pull it out when I'm 70 years old tax free? No, they tax it at that point in time. They're still going to get their money, but what it does, instead of you only being able to put in, $29,000 or $2,900 and letting that grow, you get to grow the whole $4,000, right? There's also, go ahead.
Well, just a thought that came up. So if we gave, completely hypothetical, if we gave somebody like $10,000, they would have to pay the tax on that, not us, if we put it as a business.
Absolutely.
So we wouldn't have to pay on that $10,000.
Correct. So yeah, no, what you're saying. So let's say this has happened, right? You go on a game show, Survivor, you win $1 million. Survivor, is that even a game show? Is that still valid? Do you guys know what that is?
Yeah,
Probably. I know
it's a game show.
What's a modern game show that everybody would know what it is?
Jeopardy, Wheel of Fortune.
Okay, so you're on Jeopardy.
Ken
Jennings, I think, was the guy who won, the biggest winner of Jeopardy. He wins $4 million. Do you think he has to pay taxes on that?
Yep.
They take a massive chunk out of what he wins there, don't they?
Yeah, he's going to be in the 50% tax bracket because he has no write-off against it. But does Jeopardy get to show that as a business loss?
No.
Absolutely. Yeah, because they paid him.
I meant they don't have to pay taxes.
Yeah. Just like Ashton's income, does Walmart have to pay taxes on his income they paid him? No, Ashton does. Walmart's a big corporation. They say, hey, I employ 10 billion people, right? Whatever that number is. They don't pay taxes on any of that income they pay to people. Does that make... And really, business taxes and personal taxes are so different. That's really not the show for it. But where your head's at is exactly where you need to be. So if you go out and get a summer sales job, right, as an adult, and you go out and knock on doors, and the company says, Ashton, if you go out and sell this money, all these security systems, we're going to pay you $50,000. That's awesome. But you can't come home banking on $50,000.
And you can't spend that $50,000.
Yeah, you're not going to get that whole $50,000.
Yeah, that
for
was
one.
that was something I learned super quick when I started working at Walmart, because I was like, oh yeah, I get this paycheck, multiply that by the amount of hours I'm working. My first paycheck should be around, like, I think it was $1,200, and then it came through at like $800, rough numbers. But
Yeah.
I was like, dang it. So I was doing math not too long ago about my next couple semesters and trying to save up, and I basically just dropped the expected number by a percentage, because I was like, I'm not gonna get as much as I think, plus I'm gonna have to use some of it, so in order to save it, I just lower that number, basically lower that expectation.
That's a good way to put it.
But I mean, a way to think about it, so you're like, oh, I'm losing that whatever, like $400, but then you're thinking it's not that bad because everybody's losing that $400. Like, because you aren't making, I don't know. I always thought like, oh, you make $1,200 at work, you take $1,200 home, and you can use that $1,200, and you're like, well, I'm better than the person making. I don't know how I was thinking this. I don't know how to word it either, but like, nobody is making more if, I don't know, taxes works the same.
Yeah, that's a good way to look at it, Gideon. If you're saying, look, if taxes are a little bit different and they vary based on, how much you're making and your income that we've already covered. But here's the reality, and this is what I try and tell people: always try and earn more. If you're going to exchange your time for dollars, you're better off to make more, right? Because you're going to be in a better position. Who cares? Like I hear from retired people all the time. They say, oh, but the federal government will only let me make $23,000 and then I start getting taxed. I'm like, who cares? Make that extra $5,000 working if you need to earn it. You're only going to pay 10% taxes on it. So you still, on that $5,000, you still come home with $4,950, which is, sometimes it's even emotionally better for you to be working, right? So yes, we're going to pay taxes, but who cares? Then the next step is, if you can go out and make a lot of money, then you have to figure out, how do I play with inside the rules of the federal government that they've laid out? Because these politicians make a lot of money, right? They keep a lot of their money because they know how to play the game. That's why you get a tax advisor when you hit that level. To go back to what we were talking about earlier, I always think it's funny, Ashton, what you're talking about originally is gross income. That's how much you thought you were going to make. But net income is really what you get to come home with, right? And I always got confused on this, but the way I try and keep it in my mind now is, it's gross how much I actually net. Because I'll talk to people all the time. I'm like, they ask, what's your grossly month income, right? When you apply for an auto loan, what are they asking for?
They're asking what you would make before taxes.
That's right. And the reason they care that is because they're going to do the math. They're going to say, oh, you're making $50,000 a year. You're right around this tax bracket. Do you have any other debts, any other liabilities? They deduct all that. And then they say, okay, this is how much I'll loan you, right?
Right.
A lot of people get confused and they'll quote their net because that's what they see. That's what they come home.
And they get a lesser loan.
That's right. Well, not really, because you supply a paycheck sometimes, or they get your direct deposit. And if you gave them your gross income, they'd say, yeah, I think you're giving me your net, because I'm seeing that you're getting, $800. And you're like, well, yeah. And they're going, no, you need to tell me $1,200, and you're getting that every 2 weeks or 3 weeks or 7 weeks. That's why it gets so complicated. So really, my big advice on taxes is, don't be afraid to pay them. Pay them on time, do your taxes, fill them out, keep track of your paperwork. If it's too hard and you don't want to do it, it's going to cost you to go to like a real basic software, anywhere from $100. Some you could probably get them for $50 to $75. I don't know if you've seen the people in like Walmarts or something. Those guys will do them cheaper if you're just doing a 1040 easy. Go ahead and pay them that. Does it suck? Yeah. But can they save you money? Maybe. Do you know what I mean? I've ran your guys off the free versions, or I send these guys to school and have the schools help them, because there's at school, if you're in college, there'll be somebody that'll help you fill them out. So that's a lot about taxes. I feel like that's too much. I was also going to go into FAFSA and student loans and some of those other things, but I think we'll save that for a different day.
Yeah, that could be a good separate thing.
Yeah, because I just think there's so much in it. And I think there's even more that we could cover in taxes. But my thing is to keep in mind as an adult, the worst thing you can do is throw away the paperwork and hide from it. Because Ashton said it earlier, they don't forget. The Grim Reaper comes for you. whether it be the IRS, and you know what that stands for, Internal Revenue Services. And so they're saying, how do we get revenue, money for the federal government? That's their job. Mm-hmm. But I'd also say if you're making a lot and you've got something that's helped you become successful, find a tax guy. And Ashton, like you talked about Robinhood today, your investment app, find a financial advisor. Because you don't want to just trust everything your tax accountant says or everything your financial advisor says. You leverage them both. I have both intentionally because I need to protect as much wealth as I can so that I have money in retirement. But I never want to shortchange the government because they'll never forget. Cool? So I know that might be a little bit boring for our Australian friends, but you guys' tax rates and laws and all that, there's probably something similar. It'd be interesting to hear. Let us know. Reach out to us on Facebook, LinkedIn. If we've said anything that's wrong, any of my accounting friends, lawyer friends, don't hesitate to reach out, ping us, correct us. This is supposed to be just an intro to taxes and what young adults will be seeing right now. Did that help you understand your W-2? A little less afraid of it?
Yeah, I think so. I think I just need to do some Google searches, and then that'll be good.
Well, and I think now you should have them all from your 2 jobs. Let's pull up an accounting software and go through it and walk through it, and then you can update everybody on doing your taxes and how that worked and if it was as painful as you thought. Anything else we want to shout out to on taxes?
I think I remember what I was going to say earlier when I just stumbled on my words for about however long it was. But I was going to say, if somebody says they're making $140,000 a year, you're like, whoa, that's a whole bunch. But then they're not living off $140,000. They can't buy a $100,000 car and live off the $40K because they don't have that. So I'm just saying, you got to always think about, it's not what they make. It's just what, before taxes.
What do you call that? What do they net?
Yeah.
Right. Another way to think of it is a fisherman's net. What do they net? What do they actually get in their net of that fish? Right. All the water fell through. What they keep, what they bring into the boat, what they net is what they get to keep. So if you make $140,000, that's awesome. But are you able to keep 125 of it? You know what I mean? And if so, how? Teach me. Because that's really not the case a lot of times. But people will leverage, homes, cars, if they can use it as a business. Could the car be in a business? I don't know. Maybe it's a rental Lamborghini.
If you have an Uber or something, you could write off your miles as a...
You got it.
Yeah.
You got it. Yeah, and that's what's cool and that's what you need to look for. So there's tons of fun things.
Thank you for listening to this week's episode of Adulting Decrypted. We really enjoyed having this week's conversation, and we hope you did as well.
If you ever want to comment on the topics, you can send us a message to our website, adultingdecrypted.com, our email, adultingdecrypted@gmail.com, or through our Instagram, Facebook, and LinkedIn accounts at Adulting Decrypted.
If you have any topics for the show that you would like us to talk about, or if you are a parent and want us to talk about something your kids should know, send us a message on any of the accounts mentioned. If you'd like to be a guest or have an idea for someone you think we should have on our show, feel free to send us an email detailing your thoughts to adultingdecrypted@gmail.com. Adulting is teamwork.
We have merch. If you want to show off your Adulting Decrypted pride, check out our website, adultingdecrypted.com, or our partner website with shop.spreadshirt.com/adulting-decrypted.
Lastly, if you enjoyed the show, please consider supporting us on our Patreon at Adulting Decrypted. Along with the benefits that come with our Patreon, and trust us, there are some pretty good ones in there, you will not only be helping us continue in the effort to make great content, but you will be part of a community of individuals all trying their best to adult.
We appreciate you listening, enjoying, and leaving your positive reviews. Now, the special song from Gene and Gideon.
like an adult. Talking about IRS for the very first time.
Like an adult. Learning how to do taxes and my life.
And your life?